Yeah, it's pumping.
And I think we're rock and rolling. Welcome to Wise Beyond Bitcoin, where you come to learn a little bit more about blockchain technology, cryptocurrency, the ethical, equitable side. My name is Lucas.
My name is Ryan.
I'm Jacob.
I'm Devin.
We got a special guest, Devin. That's right. More than you're used to seeing. And it's not our normal time. Pardon me. That's hilarious. It's not a normal Monday. We missed it due to technical issues. But if you thought if you were going to miss your weekly update, you're not. We're here with a special update. We got a lot of good information to talk about. Right after Crypto Dip, I thought, well, let's lead into it. We normally start this with a market update, gentlemen. And I guess, have y'all all noticed that today has been quite a... breath of fresh air, or a little bit of a green day?
It's nice. It's nice.
Especially after yesterday, right? When we had a bit of a correction.
Yeah.
We'll get into that, though. What we think might have had something to do with
yeah,
that,
we've got some articles
Fed.
to talk about what we think definitely had a role to play in the correction. And, of course, our still bare bones, but good little site of links from our site, Wise Beyond Bitcoin. Boom. Let's go to nomics.com, one of our favorite places to check out the market cap and what's going on in crypto land. And boom, like that, you go in one day to a 4.5%, over 4% increase. Now, if you could get a 4% increase in the traditional financial markets annually right now, that would be a great instrument. If someone could say, I can give you a 4.6% return on whatever in 1 year, they'd be pouring everything into it. So when people see these kinds of returns in a day, and of course, one of our special announcements later on, Devin is a special guest from the Wise Token team, and Wise Token is redeemable, smart contract, asset-backed cryptocurrency on the Ethereum network. So when you see 4.7% growth in Ethereum, we're going over to Wise, and you'll see the same growth movement. It just tracks because it's backed, and that's how it works. And it's a beautiful thing to see the layers that are being built. I don't want to spoil it. Let's just talk about the market right now. So in one day, and of course you guys have heard Cardano's been all over the news, probably because we'll get to it later. Jacob, you got some information, but NFTs, we'll continue to talk about NFTs and the role non-fungible tokens play, because in the past, it was just cryptocurrency, the ICO craze. No one really knew what was going to be bubbling up and coming about. And then DeFi, Uniswap, exchanges like that. And now it seems the next iteration or evolution is NFTs, but they're a layer because we're seeing how NFTs are being used with DeFi and lending and loans. And I don't want to spoil that, but so Cardano, in its development over the years, has just now rolled out to a place of smart contracts and having NFTs, I guess, operate on its network and being minted. So that's exciting. I feel behind the eight ball, behind the curve here. So I look forward to catching up with some time in the future on operating on a lot of these various chains. But that's just exciting to see. It's exciting to see development in the network. It's just nice to see this anywhere when you see chains mature and you see them continue to take it to the next level. I mean, a lot.
You know what strikes me after looking at these charts is that how much of these top performers today are such good quality names. Kusama, Cardano, The Graph, Polkadot, Sushi, Helium, 1inch, Avalanche. It's like all the quality names are doing well today. That's instead of some of the more unknowns. Occasionally you'll see unknowns pop up and have huge growth, and you're like, well, what is this?
OnChain, Avalanche, all of them are in there.
Yeah. Voyager token right now is leading the top, and I would say for me, it doesn't have a big place in my heart, so to speak, in the world of cryptocurrency and decentralized blockchain technology. I think it's great for what it is. Things like that in Celsius in the world of CeFi is great bridges for helping people in a safe and secure way. I think that those are the platforms where SECs and Feds and institutions maybe should, if they're involved, it's in those places that are offering people services, of offering them interest on Bitcoin. I mean, if you're sitting there offering interest on people giving you their cryptocurrency and promising to give them more of it as a intermediary, offering loans and services and taking a risk, that's a whole nother ballgame. I mean, that's a business that they're operating, a for-profit business. So, but the fact that they are bridges for gateways for bringing fiat into crypto and offering traditional financial services, that's what most people think of, right? Like, well, where can I just put it away and get interest? And so it's great to have places out there that are doing that. Kusama with Polkadot, Cardano, Algorand. Helium, Avalanche, Synthetics, of course, we love talking about that. Polygon, and we'll continue to talk about that. We've got some articles about that. So it's a beautiful day. But these percentages, if you're new to crypto or new to blockchain technology, this is not a mistake. 18%, 20% in one day is not an accident. Sure, you'll see dips and consolidations, but you'll also see when the bulls come and the market's ready and mature, you'll see this. You'll see this growth day after day or week after week, and that's how you get this. When you look back years later, when people say, "Well, how did it get this huge growth in Bitcoin? How did people, go from hot?" This is where the hodling comes in. This is the numbers.
Let's go to that next article. This was a good bullish long-term sign that the interest is continuing and that the long-term people are confident. And what this article is going into is the on-chain data showing that there's net outflows from exchanges, so into cold wallets, into personal wallets. So that's great. It's showing that there's more folks pulling their money, their Bitcoin and their crypto off of exchanges than putting it on, which reduces the supply available to be sold, and ought to be a bullish metric.
Have you guys heard of this metric? I mean, I feel like I've heard this. We've all heard articles over the years. This metric is it's a metric that's talked about a lot. When you start seeing Bitcoin come off of exchanges and onto people's wallets, that's a sign of hodling. That's a sign that they don't want to sell it. And then all of a sudden, when people are scrambling, looking to purchase Bitcoin, the supply is less, and that's where you start seeing the price go up. Until you see the Bitcoin come off of those wallets and come back out into the market, you see a reduction in the supply that pumps up. And that's what we're talking about here. So there is a nice chart to show the correlation between these outflows and the price of Bitcoin that follows. Of course, the best movement you see is when you see these times of consolidation. And here we go, and we see this movement here of these outflows, and so the hope is not. You always hear people say, well, as much as people are bullish in the community, everyone is looking for real solid long-term growth. Look, no one's expecting Cardano, Polkadot, Ethereum, everyone to just check it out. You wake up and you look at your phone and everything 5,000x'd tomorrow. It's like, well, that would be good. Nominally speaking, it would sound great. What's the value behind it? Because we're really talking about a market, an economy that's it's showing more and more value, more and more use case as it matures, and that's why it's getting more and more adoption, and it's just the beginning. And so what people love to see when we look at this is when we talk about different projects, what we're really talking about are what are these projects in this new market that are the building blocks of building value for the future. And it's literally just the beginning. When I say the beginning, when you look at DeFi and NFTs and projects like Wise Token, which are less than a year old and already have over a quarter, 250 million in growing locked liquidity, massive lot liquidity. So you're talking about projects that are ready for a growing market for inflows and outflows. That's good news. I think the best part about this article is this beautiful picture of this.
Of course. I stopped reading there.
I know. I was about to say, Devin, you've got some mad photography skills. I could see you doing a black and white of this guy right here.
Yeah, I wanted to add. Yeah, I think it's 16%. I think it's about the same for Ethereum and Bitcoin. I know Ethereum's at an all record low right now when it comes to exchange supply, but it usually sits around 16% liquidity, which is you can move that. Like people can move that. Like big people, exchanges or institutional money can move that. So that's where you see a lot of the price volatility, and that's when so much the Bitcoin coming onto exchanges makes it harder to move that in an upward. So hodling is essential for large upward swings, and it is also in line with what people are expecting. Maybe is the wrong word, but that's why you hodl, right? Because you think long term, hey, this is going to be good for me, but it also helps the case. It's very symbiotic.
It's true. It's a mutually reinforcing thing, right?
Sure. Yeah, positive feedback.
Positive, yeah, that's where I was going.
And in the short run, and we'll talk about this later, prices may seem irrational with all the news and what's going on in the market. Yep. There's an old saying, the short run prices are rational. What that means is that when you look at what's happening in the world and the market, there's a lot of bullish sentiment, and the price may not reflect it. Or other times it can be the opposite. And so for me, I think I lost where I was going with this, so we'll move on. But it was something about the
looking at long term.
No, that's right. Thank you. Now it just clicked. It's the projects. That's what I love about Wise Token, and I'm glad that you're on here to share some of the updates, Devin, with what you guys have got going on. But when you have projects where the idea is to hodl and to sit through long term and to benefit through 2, 3, 4, 5 years, that's where you see the rewards in these market cycles, because it is a new technology that's being built, and it comes in waves, it comes in layers of development where people develop something, they see how it works, it acts out in the market, a new layer is built, Polygon, a new blockchain is built, Harmony 1, and they continue to build layers upon that. So long term for Bitcoin is like, literally, it's funny that I have to say that I think this is long term, because in traditional finance, you're talking about, do you realize that where I came from in traditional finance, that people would come out of university, and the moment they would start working and putting their savings and money away, they were putting it in instruments that they were basically not allowed to touch until they were alive, until they were 60 or they retired. They were like, look, you're not going to touch this, or you're going to get massively penalized if you do touch it before retirement age. And so this is we're in a completely different world, in a completely different era, where people actually have control of their own retirement, their own wealth, their own assets. They don't get penalized for trying to access it. And we'll get to this later, but DeFi isn't really a genuine term completely, because it's not apples to apples with traditional finance, and where you see financial institutions and derivatives in current traditional financial markets are heavily leveraged with derivatives, and are not backed, which is why we have these huge booms and bust cycles where, the banks are too big to fail, but we admit that there was bad accounting and moral hazard. So when we talk about DeFi and cryptocurrency or blockchain, we're talking about people who have taken value and taken risks on these new innovative risky networks, in the sense that it took humanity, the people who took the time to understand how a decentralized blockchain works and operates, whether they're coders or not, and took the time and the value to be a part of that chain and add value to that chain. That's where you talk about asset backed and value backed, just like a commodity or gold backed currency. You're talking about chains that are initially based and predicated on actions of value. Everything that went into the chain was some sort of action of holding and saving value. And I was communicating with someone who was, we were talking about just the basics of economics and prices the other day, and many people think that the epitome of the best form of exchange is barter. Like, barter is just the best because money's bad. It's like, well, no, Many times if you don't have the exact item somebody else wants, then having that money, right, is necessarily a good thing. And what he said was, and Ryan, you're going to love this, brother. What he said was this. He said, oh, so let me get this straight. Basically, if let's say I have eggs, or I make something that's perishable, and I want to exchange it to somebody, and I want to exchange it to them right then and there for that cake that I made, for its value at that point in time. If I exchange it for money, then I now have something that holds its value. It holds the value that the cake never could. So now all these people that make and trade and services and labor or goods that may have temporal value because they serve a need and a value to people in that time, people can capture that. They can literally capture that. And you can only do that with the medium of exchange, with a unit of account, with some type of money to capture that value and save it. That's one of the beautiful functions of money, which is why it's important to make sure that what we choose to use as money is ethical, is transparent. We understand how it works, and that it's working in a egalitarian, equitable manner. Okay, so that is my rant, and now for the rest of the stream, Ryan, is there a segue from that into?
I think there could be.
Okay.
Yeah. Well. So this is a good article. Back to talking about the Fed and what their minutes are from their last meeting in July, and this is they're changing their footing a little bit. They're changing how they're talking about what to expect from their policies, and they're saying that they're looking that the economy there's first of all there's a little bit of controversy. So the Fed's a board, and they're not unanimous. They all have their own ideas about what should be done, and there's a split. There's a side that's very much scared of inflation and scared of and cautious about policy and looking to pull back some of the credit creation and monthly bond purchasing that they're doing. And then there's another side that's not so worried, that's concerned more about COVID Delta and how that could affect the economy. And so they're more about they want to continue the purchases as they are. But the more vocal side is this crew that's concerned about inflation. So they're changing the overall takeaway here is that they're changing their guidance for what we should expect for the rest of the year. Previously, they said that we should not expect any kind of change in the monthly purchases throughout the year, and that it would be next year when they would consider restricting the credit that they're pumping into the economy. And now they're saying, well, it's going to be the end of the year when we start to taper or to start to constrict the money creation. So they're managing expectations. They're looking to get people to price in this reduction in their accommodation, but they don't want it. But they also don't want to spook the market. So they're because that wouldn't be good. So it's a dance they're doing, and but long term, if they are honest, and this is really what's coming, this is going to be not so great for stocks, not so great for financial assets, and could mark the top of a local top, a near-term top in the financial markets. Mm-hmm. And in the short term, that might not be so great for Bitcoin, because Bitcoin tends to follow the dollar. As the dollar falls in value, Bitcoin goes up as like a hedge, kind of like gold. And as the dollar rises in value, assets like stocks and other financial assets tend to fall, and Bitcoin in the short term tends to fall with them. And it's largely because of institutional players. When their other investments are going down, they're getting margin calls and they're having to raise capital, they sell other positions. And one of the positions they have now is Bitcoin and crypto. So weakness in the mainstream financial markets can turn into weakness in the crypto markets. And I think we saw that yesterday. There was a sell-off in the stock market with this news about the Fed, and the crypto markets were largely down too, except for a couple players that were doing good, like Solana, but and Hex too. But long term, I think this is a short term thing. Weakness in the traditional markets will probably be negative for crypto, but as that gets baked into the system and baked into our current awareness, people will tend to move towards the crypto markets, because that'll be the next growth story, or at least that's my hunch. So yeah, short term, the taper not so great for prices in general, but long term, I don't feel like this is going to be a big thing. And I'm also not that confident that the Fed is really going to taper. I feel like they're going to tease us, maybe pull back those purchases a little bit, but it'll probably look a lot like it did in 2015 and 16 when we began tapering, only for the market to become very upset about it and for the political reality to set in that this is not sustainable and we're back to accommodation. So I feel like this. I don't think the taper is a big threat. I feel like it's just a bit of an expectations dance that they're doing, and that even if they do commit to it, it'll be very limited, and we won't probably be too far away from another renewed credit accommodate. A renewed push to extend credit and to start buying more assets. Ultimately, that's what the economy relies on. When you have this much debt, private public debt, you really can't sustain any kind of true taper, any kind of true credit constriction, because what happens is as interest rates go up, and then when you combine large amounts of debt with a higher interest rate, you start getting higher interest rate payments, and then it becomes impossible to manage the debt, and then you run into things like debt deflation, credit destruction, and you can run into a deflationary spiral. And that's like Econ 101. Everybody at the Fed knows that. So they're going to do whatever they can to manage the interest rates, keep them low, keep those debt payments low. So that's my hunch.
I like what you said, and it's a perfect segue into this next article you have. Now, the article title is "Crypto is 95% fraud, hype, noise, and confusion." Feds, but see, the funny thing is that what you were just saying, Ryan, and we were talking about this earlier, is that if you look at the history of the Fed, in order for them to manage look at how monetary policy is handled through central banking. In order to do it properly, they have to dance. They have to throw out false flags. They have to tell people, "Hey, we're gonna be real liberal. Hey, no, we're gonna pull back. Hey, we're gonna extend more credit. Hey, no, we need to pull it back. Hey, don't worry about it. Oh, no." But they have to.
Because there's a fair amount of fraud, hype, noise, and confusion.
So their system is based upon fraud, hype, noise, and confusion. Literally. And what's funny, it's not like, well, this is just an isolated event. It's like, no, we've been talking about this. You and I have been talking about this since before we even knew about cryptocurrency even existed. We were talking about this before cryptocurrency existed. That the Fed would come out and they would make some signal about what they were going to do in this capacity or that capacity. And we would always sit around and talk about what's really going to happen or how long it's going to happen or look how they... So it is how the banking system operates. Now compare that to Bitcoin or Ethereum or cryptocurrencies in general, and you're looking at systems that, whatever their weaknesses and flaws, it's not...
They're transparent.
They're transparent. It's the opposite of fraud, hype, and noise and confusion. It truly is,
especially when you're looking at locked liquidity projects like Wise.
Yeah. When you could go see it on a contract address and go see it still. So it's funny when people talk about cryptocurrency being difficult or it's like, well, coming from a background where you spend years trying to understand how the institution of money works, and no one comes out with like, oh yeah, I got it.
Well, what's hilarious about this is that the claim here from this Fed chairman or this Fed member, whatever where is he from? Federal Reserve in Minneapolis. Okay. The funny thing about this comment is that there's been billions of dollars of institutional money flowing into crypto. I mean, whether it's Michael Saylor or fill in the blank, PayPal, there's institutional money and interest is here. Well, we have an article about Wells Fargo here that's coming up in a minute. JP Morgan's another story, Goldman Sachs, on and on and on. All these big institutional names plowing into crypto. These are the same institutions that borrow and trade at the Fed, right? They not all of them, but some of them had bailouts from the Fed. Others have accounts with the Fed. There's been a lot of activity with the Fed's reverse repo facility, where all this cash gets parked at the Fed for tiny amounts of interest overnight. So, and the very institutions that are getting into crypto are also getting into this, using this Fed repo facility. So it's funny that they would say this, because they're essentially saying that the institutional investors that make up the modern financial system are involved in an investment heavily that's 95% fraud and criminal activity, and they're regulated. These are regulated entities that have the SEC, the Commodities Future Trading CFTC, that body, like all these different bodies regulate these institutions. And if they're truly engaged in the kind of activity this guy says they're in, and he's engaging in exchanges with these same institutions, he's almost admitting to being involved in people who are criminals at the highest level of the financial system. And obviously that doesn't make any sense, right? And this criticism about being 95% fraud and criminality, that might have held some sway, 10 years ago when this whole thing started, and the Silk Road was a big story, and it was a lot of dark web activity. But this doesn't make any. This is like this guy stepped out of he hasn't been around in a decade, essentially, is what it feels like to me, and then doesn't consider how if his claims are taken at face value, it kind of implicates his own institution. Because if these guys are engaging in criminal activity, then what's the Fed doing, taking their money and interacting with them? It just really doesn't make any sense.
There's a lot of statements that show lack of understanding or contradictions. There are thousands of garbage coins that have been created. Some of them are complete fraud Ponzi schemes. What's funny about comments like this, it's like people just like to say comments to shock people and to act like they're virtuous or value. It's like, so 2 or 3 years ago, some of these coins didn't exist, or you didn't even give this ecosystem, this market, no one even paid attention to it. And now you speak as if thousands of horrible products have been created on this network. It's like a network that you just now are starting to pay attention to. And how many people in the world are even aware of this network? Like, if you're really trying to protect people from nefarious instruments and Ponzi schemes, Bernie Madoff, Enron, I mean, go down the list, Countrywide, go down the list of how many people have been devastated by Ponzi schemes in traditional finance. When people get into crypto, at least they know, buckle up and strap on your boots, because this is the Wild West, and it's all done through codes and contracts. And so you better make sure you find a team and a product and a project that's transparent, and go on down the line.
I think there's something else that should be said about this. If you scroll down to that next comment, it says the central banker also said he has struggled to find people who can articulate how Bitcoin is meant to solve meaningful problems better than existing currencies.
Give him my number.
That's what I was going to say. He needs to check out our podcast.
He says, I've not seen any use case other than funding illicit activities like drugs. And so wait a minute. What he's saying, and let me tell you this, I have to be completely transparent right now on this channel. I'm not.
We've never used it for those two things.
You never have. You never have to confess to anyone or anything between you and your heart and that which is, that divine energy that we all are connected to, that love. But I will confess to you right now that I've been involved in cryptocurrency since 2017. I've literally tried to find whatever project was out there that I could learn and download how I could send it and store it and stake it and exchange it, how it works, just to learn how it works. I've never in my life in cryptocurrency come across illicit drugs or prostitution. I don't know how to do it. If you were to be like, if you were to come up to me and say, hey, Lucas, I know you know a lot about this cryptocurrency. Can you help me get some drugs and prostitution? I would say, my friend, I can help you get a MetaMask wallet downloaded on your Android or your iOS device. I could help you download it on your computer maybe and tell you how to store your 12 keys or 24 keys or whatever it is these days. But no.
I've got an answer for his question. What meaningful problem does it solve that other things can't? I would say, well, hey, those models you guys are agonizing over, trying to predict velocity and predict patterns of spending and inflation and savings, and you know how that's a big deal. Solving those questions, to figure out policy. Well, this economizes on all that time and energy and knowledge, and just automates those questions and answers for you, such that your job's not even really needed anymore.
Well, not just that, but remember when we went to the Fed? We went to the Fed together. Did we not both go to the Fed?
Did.
And when we went to the Fed, inside of the Fed, and counterfeiting, there's actually a whole floor dedicated to Secret Service. Counterfeiting is such a big problem with legal tender fiat currencies that they have huge departments around the world dedicated to finding people who counterfeit money and do this. So. In fact, they even give you fake shredded money, old money that they just have to get rid of in circulation. It becomes such a waste. So you'll never find people throwing away Bitcoin like, oh, this Bitcoin's no longer good anymore. It's been, and so to articulate to him that this technology eliminates all of that moral hazard and that counterfeiting, and allows for a ledgering system that does exactly what you said earlier. But I also want to state what this statement says, and I think that. I pray for him, his family, and whatever's happening right now, because this statement could get him in a lot of hot water. Because he basically just told the world that he has seen nothing but drugs and prostitution and illicit activities funded by Bitcoin and cryptocurrency. Like, this dude literally is probably about to get questioned by a lot of agencies to talk about because you can't go to work at the Fed and be like, I'm in charge, what's my TPS reports filing today, and then be in the backdrop somehow being like the
plugged into the drug trade,
the vigilante Batman who has seen how all the drugs and illicit activity and prostitution works with cryptocurrency.
That's what he's telling on himself. You don't do that.
He literally didn't, people do that, that's, bless his heart. He literally just told himself, he literally just, he has not, and what's funny is I have not seen use cases other than what replaces money and other stuff.
The one project that does fund these illicit activities, I'm invested, guys.
Yeah. I mean, God, it's just so isn't there a little bit of white powder on every paper dollar? They say on something. What is it?
That's what those machines at the Fed are there to do. They're scanning all the money and stripping the drugs off.
What is it? Adderall? Is that what it is, or something? I don't remember what it's called.
It makes me think of that joke you used to tell, Luke, where when every time people make these kind of claims, you say, well, yeah, whenever I need to go and do some underworld trades, I always tell my partner, meet me at the docks and bring your keys.
Yeah, bring your Trezor wallet. And, it's like anyone who follows this and loves this for its transparency and for how it could be a better way for humanity and for all of us to know the technology, how we can all heat our homes with this new fire. It's definitely not for those purposes, considering it is not going to help you out there. If you use your cryptocurrency for nefarious purposes, you will be tracked. It will be found because the chain analysis is already there.
Look at what happened with that last hack that happened on a week ago?
Yeah.
The Polygon network hack or Polygon chain. What was it? I don't remember what it was called. Polychain, that's right, not Polygon. Yeah, Polychain. Let's not get confused.
Yeah. I mean, the point is we can all go to Etherscan. We can all go to the Block Explorer and look up. Once you send cryptocurrency or a digital asset or whatever you want to call it, once you send it to somebody, you can look at their address and see what they're at. I mean, it's that simple. There's the blockchain.
I've literally done it for friends where it's, hey, my wallet was taken. Follow the chain. See, this guy took it out like an Ethereum max centralized exchange, and email him.
You're right, brother. So my point is that people, when we sit here and talk about the beauty of this technology, it's not because we envision a world where everyone can go around and spend on illicit activities without being found. It's like that's actually easier to do in the traditional financial system than it would be
paper
in
money.
This. So
doesn't get any more anonymous than paper money.
Speaking of,
I love it. Down at the dock, I was just thinking about this. Do I scan your there's time that's there, and you have your phone out, or you a cop? There's so much that just wouldn't work.
Yeah. Yeah. Is this a multi-sig wallet? Where's your partner? I don't know.
Monero, right? Monero?
Yeah.
Ethereum? What?
Yeah.
Dude.
So we got another article to finish off this beautiful round of, what's funny is
regulators putting their foot in their mouth. That's the theme here.
And the funny thing is that because our tradition, our formal background is in these models and in traditional finance and markets and economics, and where you talk about Fed chairmen or people working for central banks, like we live and eat this stuff up before cryptocurrency existed. So looking at people of my generation, or looking at those who made work in this as a profession, and haven't taken the time, or maybe have a vested interest, it's funny to see the opinions fly out, because it's clearly there is either a bias and or a lack of understanding of really what DeFi and what cryptocurrency is. It's not comparing apples to apples. It's, remember when we talk about Bretton Woods or traditional finance, we're talking about a monetary system that has heavy oversight and has been meticulously put together. Every T crossed, every I dotted. It's literally been planned, centrally planned. It is the most centrally planned and formalized form of money as an institution that you could plan. So going from that to a system that is set it and forget it, no one can control it and tinker with it, where we talk about the collateral versus an uncollateralized financial system. That's where I say it's not comparing apples to apples, because we're going to a system that requires value from a system that creates value out of nothing. Like literally, people who are in charge of money can say, you know what, I'm going to print $1 trillion and we're going to put it on your grandchildren's grandchildren's grandchildren. Don't worry about it. We're going to rack up $1 trillion more debt. They have the power to just create money that has real purchasing power in the economy at that point in time. That's the monetary system that we are moving from. And so to go from that to a system where you don't give that purchasing power to a small group, and you see the value that's going onto the chain isn't just printed out of thin air, it's put from people who are putting these chains, communities that are building value, that are locking up value in the present in a world that's unknown. It is unknown. That's the part I would say that I would like to keep on driving, is that a lot of these people are posturing when they come out and they make these claims. 2 or 3 years ago, JP Morgan Diamond, this is all a fraud. Everyone's staying quiet. What's the Fed going to say? What's the government? What's everyone going to say? Everyone's just quiet and waiting. Meanwhile, men and women are really going out there getting burnt with fire, learning how to put it in a chimney, learning how to keep it in their home, to heat a stove to cook food with. That's people have taken a risk and got burnt, learning how to build blockchain technology up from the ground up without an FDIC to protect them when their keys got lost or their modem got crashed. So, for people to come out here and just criticize this new technology, it's like critiquing Wi-Fi in an airplane. Wi-Fi in an airplane, look how slow it is and sticky it is. It's like, dude, you're talking about Wi-Fi in an airplane. You haven't even provided a way for people to have Wi-Fi or fly, and you're critiquing the fact that it's slow right now. Come on, have some patience.
This article by Gary Gensler from the SEC is actually, we're accustomed to criticizing the regulators, but I think in this case, it's actually, he makes a pretty decent point. He's responding to people on Twitter and Telegram suggesting that they're not going to be able to regulate DeFi because it's decentralized. He responds with the claim that the D in DeFi is quite frequently utter nonsense. And he says that it's decentralization theater, because there's frequent intervention and there's teams that can roll back. Obviously, there's like the Poly network they talks about. There was an amnesty thing. There was an intervention by the team. There's other examples of foundations in DeFi projects. There's governance tokens, and there's various elements of this where you can say this is a team creating a code, or various. There's a bit of a structure, is what he's pointing to, that it's not completely decentralized. And I guess the implication is that where these teams exist, there's points of contact that the regulators can then lean on them, and either deal with their servers or their accounts or however they go about it. I think I like to get you guys' take on that. What do you think? Because this is something that I've been thinking about just in my own head, just wondering what's this all going to look like, and how's this going to affect say for example Uniswap.
Well, I'll let anyone jump in on that. I'll just say real quick, I agree with you. However, I think the point of decentralized finance is not to state that any of these ecosystems have reached some pureness of decentralization in how the codes. It's that everyone agrees to the ball game that they're playing on. Everyone's performing as a smart contract ERC20 token on Ethereum network, or go down the line of what network you're on. In Polygon as a layer 2 built on Ethereum, they're subject to people removing their tokens and going somewhere else. Like, it's a wild west ecosystem of competition. It's decentralized in the overall foundation, but even Ethereum or Bitcoin, people look at the addresses of Bitcoin and say, well, look, Bitcoin itself is not even decentralized. So if we want to go into that critique, we can say, well, there's nothing in any cryptocurrency that will meet some standard of
perfect definition,
some platonic ideal of decentralization.
Yeah, I think there's points though that are just like, that's blatant centralization, and that you're cascading around as or gallivanting around as a DeFi project when your team holds the keys to the bridge. Like,
sure.
I would never say Polygon until that somehow turned into DAO or decentralized in some way, that there's a governance, or I don't know.
They're not, but they don't claim to be. And some of them...
Exactly, yes. They don't, but some do.
And some of them state that, well, right now, in order for it to function, you need direction in centralization because it's an incomplete product. It's like the car is still being built. Like, we're not ready to give you the keys and say, go take it on the highway and give it oil changes from the dealer that you can go anywhere to. Right now, we're still figuring out how to put the transmission and the engine and the axles and the bear. Like, it's still ground floor up in a lot of these products.
Oh.
So,
and another thing I would bring up is that, like you say, that the platonic ideal of decentralization might be far off into the future, or not possible at all. But the fact that there's exchanges and platforms and protocols where you can connect a MetaMask wallet and never give custody of your assets to any other third party and just do your swaps right out of your wallet, that is an element of decentralization that's real.
Mm-hmm.
That that it meets. So it accomplishes certain decentralizing goals, even if it's not a pure decentralized thing at its core.
I'll say, right, and that's why I wish more of this was when people call it DeFi. But to Lucas's point, and it's not, I'm not smart for saying this or agreeing with you, because I think it's been said by lots of people who have the same, Karl Marx, saying that, I think the quote is something about the modern bourgeoisie itself is the product of a long course of development over a series of revolutions of modes of production and exchange. So what he's saying there is, you need a central capital mode of exchange and of production before you can fund and sustain a communal society. That's like, right. I think that's an idea that's, just American transcendence.
That's actually an idea that's not as appreciated in Marx as it should be.
No, it's not. Yeah,
because he points to capitalism as a necessary stage in this evolution.
Yeah, in continuous. Yeah,
which is kind of lost on those who say, tear down the capitalist system now. And it's like, well, then you've just gotten off the historical escalator to the next stage.
Yeah.
That's a really good point. And I just learned that today.
And it's also a great segue into talking about the bourgeoisie. I mean, the wealthy clients. I mean,
tomato, right?
Well,
Wells Fargo's got some news. You want to take it, Luke?
No, I wanted you to, brother. I was going to say, go ahead, rip into this one, my friend.
Okay, so this is another of those stories of an institution that we know that's in the financial world, rolling out products for their customers that are rooted in Bitcoin or ETH or crypto. And so it's Wells Fargo. And it's funny that it's Wells Fargo that they're opening up this new branch of their business when they just closed a massive branch of their business, not by choice, but they were forced to. They closed their entire consumer credit line.
Is hilarious.
Because of all the fraud that they were engaged in. Historic fraud. I mean, off the charts. If you don't know about it, go look at the Wells Fargo story from a few years back. They had an incentive program for their employees to open up as many lines of credit as possible, and they had a quota. You had to open up so many accounts over every month just to keep your job. And then of course there was there was perks for doing more than that. So they created this incentive system, and they didn't bother creating a check on it. So what they ended up doing was incentivizing wholesale fraud across their entire organization, state by state, city by city. It was pretty comprehensive. And what was going on was that they were creating lines of credit in their customers' names without even telling them about it. So people would find out they had a credit card or a loan that they weren't even aware of. They never opened it or anything. And this was all done to create. This was done to get the commissions. Every time they'd open a new line of credit, the Wells Fargo would give a commission. So they were slapped on the hand for this incredible amount of fraud, and they were punished recently with the news they were going to close down their entire consumer credit line. And so now I guess they're looking for an alternative, another line of business, and they're looking towards crypto and a passive Bitcoin fund.
Oh man.
And so the passive is the idea that they're not going to be pitching this as an actively managed offering. It's just a passive thing. If you want it, we'll put you in it, and it's you kind of, I guess it's on the consumer or the customer's responsibility to monitor it and
ask for
see
it.
If that, yeah, and ask for it. Yeah.
Mm-hmm. So that is hilarious because we talked about that the other week, and I didn't just put the two together until you just mentioned it. But I mean, just think about that. We just got showing an article where someone who worked for the Fed is talking about fraud and deceit and what's going on. And Wells Fargo, one of the largest banking institutions in the world, just had to shut down its whole consumer credit line because that's in one of the regulated industries. That's an industry that doesn't claim to be DeFi, where people don't take the same risks. That's where people are supposed to be something that's highly secure and highly regulated. And there you had a bank that literally had to shut down its whole consumer credit line. And is the company still around? Sure, they're doing their thing. They just, keep your license, keep doing what you're doing. Just close that line down, and we'll brush on the rug. We'll make a news article about it, and then business as usual. So, if he's worried about, I guess whatever he's worried about, he might want to stick to. I guess if you're a football referee, don't complain about what you think maybe a foul in soccer. Yeah, I guess.
Also, the old saying, "Don't throw stones in glass houses," right?
Yes.
That came to mind.
I dig it.
Picture not pretty.
Now, I think Devin already kind of hinted about this one. Polygon's going to form a DAO, and I'm excited about this. So this is going to kind of decentralize the governance model and crowdsource decision making. Is that a good way to say it?
Yeah, I mean, these guys are good guys. I've met a handful of them, and they definitely have best interests at heart when it comes to their ethos and their. I think just doing what we just talked about, what probably what Binance has discussed as well with this, all that, like build it up centralized, and then maybe one day cut the cord. But they're actually making moves to do it here very soon. So it's cool.
Glad to see it. And I think we should mention they just acquired the ZK rollup Hermes, which is the first blockchain network and token merger. Very cool.
Yeah, making moves.
Yeah,
Got money to play with, so.
And they've done well in the last few days, I believe. Polygon has.
Right.
Reflecting this value added.
I would say they've done extremely well this past year.
Oh yeah.
Oh yeah.
Oh yeah.
Well, it just goes to show how much room and space there is for smart contracts in the world of blockchain, how young the market still is. Because when people say, well, it's done extremely well, yeah, and what is it? Well, it's another lane on a highway that's trying to make room for more cars. And that's
Right.
what they've done. They've created for to take a bigger breath. They've allowed for the Ethereum network to push along more transactions, to do contracts that are more nuanced and complex without the exorbitant gas fees which can come about on the Ethereum network currently, although I know the proof of stake and many other things are happening to lower the gas fees. But as we see these chains, it looks like we're looking at a web. No one would ever expect a spider to just have one strong piece of silk, and everyone's just waiting for, like, well, which one do you think is going to be the piece of silk that holds? It's like, this is not expected to be a piece of silk. We're looking at a whole bunch of interoperable chains that are using ledgers that are transparent, so that, and that's how they can operate together without being having a flaw, in the chain. And so it takes time to build that. It takes time to build a network that's transparent and decentralized to operate with another chain, and to maintain that strength that they hold individually, and to maintain that together and get stronger actually together when you build different chains and you bring communities. So it is the beginning.
You bridge the network effects.
Yep.
This is an interesting bullish article. Now, it might not seem bullish, it's a hack, right? But the fact that the crypto markets are still rallying in the middle of a $90 million hack, that's pretty cool. Right?
That is true.
I mean, look back at Mt. Gox.
But
that's at a local top for like a long time, right?
But let's just...
And now these stories just...
not
even brushes it right off.
Look, if you've listened to us, and if you haven't listened to us, maybe you listen to anyone talk about cryptocurrency and blockchain, where you don't keep your crypto, where you don't keep it. I mean, unless you want to trade and have fun, I mean, keep it there if you want. But cryptocurrency is about being the custodian and taking responsibility for your keys and for what you have. So what you don't do is you don't give it all to an exchange, and then when something like this happens, it's not the fragility of blockchain or decentralization. This is what happens when you don't participate in the actual network and take responsibility for your keys and your chain, and you give everything over to some centralized party. That's what gets siphoned. That's what gets hacked time after time after time, whether it's Mt. Gox, whether it's, filling. There's one after another.
That's well said. That this is not a hack of any chain. This is a hack of a centralized ledger, which happens.
Which it's a point of failure. People forget that a centralized ledger is a point of failure. It's why you should keep your keys in your wallet, because if it's not your keys, it's not your crypto.
That's right.
And there are we sit in meetings. I had a meeting today about this. We're talking about using Chainlink price feeds for our lending and borrowing protocol. We're like, just that alone. I get Chainlink's a decentralized data aggregator or Oracle service, whatever you want to call it. It's still a point of centralization that you're using their price feeds that are sure based on whatever. But I guarantee you there's a point in there that's also that someone could find to manipulate. So you have to be cautious there. And we're engineering new ways to do, to average it with other things just to make it safer. There's so many points of centralization, even in the very decentralized things in the space. But yes, the most point of centralization is not your keys, not your crypto.
Totally.
I think that's a good point. That even I think that's a good point. That even in the DeFi decentralized crypto space, there's centralizing elements. And if I can lean on my economics, I would say that's a kind of akin to the market failures that we used to talk about. And we, instead of saying that's a failure that's that's kind of detrimental to the market argument at all, they're always said that, okay, these market failures are opportunities for other entrepreneurs to innovate and to add value, and that's inevitably what happens. So yeah, I mean, we could point to centralizing elements, but the more we point to them, I think we're just shining a light on what the next wave of innovation might tackle.
Right. Yeah, I think you're exactly right.
Speaking of the next wave of innovation, I think that's a good segue, Ryan, into the last article. Well, in this little series of our stream before moving on to some other news, but I thought maybe you could touch on to the recent Bretton Woods, the previous Bretton Woods, and...
Yeah, okay. So on Sunday, I believe it was the 15th, there was a 50th anniversary of the closing of the gold window, or the end of Bretton Woods, which was an international monetary agreement. And so what is all this? What's it about? Okay. Well, if you look at charts, looking at the looking at productivity versus wage growth, you see that 1971 is like a key year where there starts to be this split from where the higher earners make a lot of money, along which charts the crazy productivity increases we've had, but the working class don't share in this. The wages kind of are stagnant, right? And so one of the big mysteries is, well, what explains this? And this is essentially the inequality story. Well, the end of Bretton Woods occurred in 1971, which is the same year that this big split in productivity and wages happened. The economic understanding of what's driving all this is pretty simple. Bretton Woods was an agreement where the dollar had this very loose link to gold internationally, which basically meant that if you were a foreign central bank, you could redeem. There was this redemption protocol facility where you could take your dollars or your dollar denominated assets and you could redeem them for gold. But it didn't apply to the U.S. citizen or to common citizens. This was really a central bank to central bank kind of thing. And the mechanism or the system that this replaced, this Bretton Woods system, came about after World War II, and it was a replacement for a much better system, which was called the classical gold standard. And this article gets into the differences of what the classical gold standard was and what Bretton Woods was. And the other way to think of Bretton Woods is, instead of it being a pure gold standard, it was a dollar exchange standard, which essentially meant that the dollar was treated as good as gold internationally, and it was held as a reserve asset for other banks and central banks to then pyramid loans on top of and extend credit on top of. And then, so this created this perverse incentive where the U.S. could just print up these dollars, and since they were treated as reserves internationally, we could then import all these goods and services and essentially export inflation, and then do this year after year, decade after decade, right? Well, eventually these dollar balances in foreign hands piled up, and instead of using them to fund loans and credit expansion, they were looking to redeem them and get the gold, because there was a fear that the dollar had been abused and devalued somewhat, and that this peg that was part of the Bretton Woods Agreement, $35 an ounce of gold, they feared that peg was not going to hold. So this was a bit of well, let's get out of this position before the peg collapses, right? So I think France and Charles de Gaulle was the president of France, and he was one of the ones that really forcefully tried to redeem the foreign dollar-denominated assets they held, and they held a lot. And this created a bank run, essentially, where all these different nations tried to redeem, and they did, and it drained the supply of gold of the United States very, very, very fast and very quick. And it was clear that something had to happen. And Nixon chose, instead of doing the mature thing, which would be, restricting the credit growth, restricting the money growth, and trying to improve the position of the balance sheet of the country, they just said, okay, we're just going to renege on the agreement to back the money by gold, and it'll just become purely a paper money that has no commodity backing, and that would relieve us of the need to be disciplined. And so the world shifted from this quasi gold standard to a pure paper money, and we've been living with the effects of that ever since. And one of the effects is very low interest rates, massive amounts of debt, and wage growth that doesn't keep up with inflation. And it's maybe a diversion of income from the wage earner class to the investor class, because as new money is created and pumped into the system, it tends to go into financial assets foremost. So holders of financial assets are the ones who tend to have their incomes boosted in these environments, and wage earners see it last. So this is all a big institutional evolution that really changed how people were paid. Like not in the instrument, but in the value of what they were being paid in, and the economic effects of that. Well, it's a very interesting article.
What you're talking about is the history of money. And what's funny is when we sit here and we talk about Fed chairmen coming out to people and sit on a pulpit, on a pedestal, acting as if they're speaking from an institution that historically has all the knowledge and understanding and has everyone's interests at heart. We're looking at a literally go back to the history of money. Look at it. It's been one bumbling experiment after another. It's well, hey, we're going to give you hey everyone, we need to take your gold. Well, hey everyone, we're going to give gold to central banks. Well, hey everyone, we're no longer giving gold to central banks. I mean, it's even back then in this article, it's funny. When other countries were saying, "Hey, U.S. government, you're printing all these dollars for us now, and we'd like to have our gold. I don't think that you have as much gold as you just keep printing." Whoever was in control of the IMF, I'm not sure, but they tried to paper over the problem by issuing SDRs, special drawing rights for international settlement in lieu of gold. So, but it proved futile. Because it was like saying, here's $1 for gold. And someone saying, well, I want the gold. Well, don't, okay, I see you want your gold. Hold on. I've got this dollar for dollars is what I'll do instead. I can see you really want your gold right now. So I've got my friend over here, the IMF. And they said that they're going to issue you this new dollar that gives you these dollars.
The funny thing about that is the IMF has no national economy underneath it. So you wouldn't be able to say, well, at least with the dollar, you could say, okay, well, it's backed by the economy, the strength of the economy of the United States, right? Or it's backed by the taxing authority of the IRS and whatever. Yeah. But not with the IMF, you don't, I mean, what economic powerhouse is funding the SDR? It's just a group of regulators.
Unless it's on the back of some kind of reserves that it's amassed in time. I don't know. I haven't checked his books, but I agree. I hear what you're saying. I just think it's funny. You're looking at a system, Bretton Woods, the unraveling. This is the monetary system that is currently why it takes so much regulation, why there's counterfeiting, why we're grateful to have the Yellens yelling and this guy yelling also, and figuring out, to make sure they're after all those nefarious, illicit, counterfeiting characters that you find in traditional markets. But Bitcoin and blockchain technology is an opportunity for people to exchange value and communicate value, to have ledgers that can't be fraudulently cooked. You can't cook the books. That's what's cool about blockchain. You can't.
It's right here. It talks about how Nixon closed the gold window. Mm-hmm. Well, with Wise and other similar smart contract protocols, there's no closing the ETH window. Right. There's no decoupling the Wise token from the ETH token, right? Which is what happened here, right? Which is clearly a breach of contract, change in the agreement. When code is law is kind of the catchword here.
I say we go into this a lot more detail, especially if you want to hear more about what Ryan has to say and I and Devin. There is a podcast where we go specifically into this topic of Bretton Woods and the implications that had on capital markets and the economy. Devin, anything you want to add to this?
I like these guys. No, I'm really excited what we do. Did you want me to talk about the future?
Talk about anything you want to talk about, brother. I love this. Yeah. Dude, this is your baby creation. I'm just grateful that we can all sit around and talk crypto and blockchain because you've got a background in an understanding and appreciation of the same knowledge constraints. What we're really talking about, whether it's from a background of this or a background of that, we're aware of knowledge constraints and problems and how Bitcoin, cryptocurrency, smart contracts offer solutions to knowledge constraint problems that many people don't even know exist or aware of. So it's a pleasure to be able to sit around and talk with each other and help each other wake up and exercise these parts of our minds. So yeah, the last episode, I was just telling Ryan, I really enjoyed it.
I enjoyed it too, and again, I think I alluded to it at the end. It wouldn't be a conversation without you guys. So this is not just me, seriously. Equal splits. Trust me, you guys drop a lot more knowledge than I drop, so I don't know if it's even fair for me to take equal splits. But yeah, I love what we do here. Pump it out, podcast out every week, Tuesday or Wednesday, depending on schedules. But we'll always have one. We've done it for the past 7 weeks now, which seems crazy to think about. And yeah, we've got some good topics there. A lot of it relates to Friedrich Hayek and his philosophies. Specific knowledge is a term he used. And Friedrich Hayek there's an interview. We mentioned the quote in, I think, our fifth or fourth episode, but I watched the whole interview. It's like an hour long, and the whole time he's just dropping. He's like, "There's going to be a digital money that doesn't have government attached," and then it's like, "This is 35 years. This is 1984, and you're dropping this knowledge." It's like foresight he has when it comes to what we're talking about too with blockchain and how it's a decentralizing technology for the future. Yeah, it's a great time.
Well, speaking of a great time, you're actually in many ways not just about education and talking about sharing knowledge, but you're intimately involved with an innovative project in cryptocurrency, and I'm really grateful that you could spend some time to jump on our live stream today, brother, because I was hoping you could talk a little bit about the recent achievements that Wise Token has just made in the world of standing out as a beacon on the hill, in this world of decentralization and autonomy. And
yeah, so I think the thing you're alluding to is the funding of what's called a legal opinion letter. You need one pretty much if you don't want a slap on the, not even a slap on the wrist, if you don't want to be in trouble with the SEC later on. What it does, it's essentially a lawyer makes a claim that you are not a security and that you are a utility. And so we have a great lawyer. We've worked with him in the past. He's done the legal opinion letter for EOS and stuff. And you're like, oh, but didn't EOS get hit with that? Yeah, exactly. They got a slap on the wrist for something they should have gotten a lot more, in my opinion, a lot more regulatory scrutiny from entities. But they were let off, partly and due because they had such a good legal team, and that's same guy we're working with. He's well known in the space, and that gets us a lot of leeway when it comes to reputable exchange listings, reputable institutional investors. I have a point on that in a minute. And just, the doors are open now for anyone to come build on what we built, because that's part of what we are. Is if you want to build on Wise Token, open arms. We have 2 projects working on it right now. One publicly that we've already announced, Praise Token. And they're going to back their token with Wise, like the base layer. So
that's a mutual aid group, isn't it? Praise Token. Praise.
NFT.
It's an NFT, but they work on doing. I want to say they work on doing charity or projects for something. What?
No, they're just getting started. You might be thinking about something.
Oh, okay,
but,
okay.
Hey, you can get us in contact with them.
Praise Token, no.
PraiseToken.io.
PraiseToken.io. Okay.
Website. And it opens the doors to that. It opens the doors to something we've been wanting to do for a while, which is a grant program for if people do want to build, we're decentralized. And the other point is this letter was raised in a decentralized fashion. Our team could not contribute to it. It had to be a community raised thing. And it was $148,000 was raised by the community between 180 people. So we're super grateful. And it allows projects like Praise, thank you. It allows projects like Praise to build on what we're building. But again, back to this program that we wanted to, this grant program, we want to make this even more decentralized. There are points of centralization still socially in Wise. The code is decentralized, but there's one website. Sure, you can go to Etherscan, but you have to know how to do that. There's one website to interface with everything. Sure, there's other community websites with smaller things, or Simon has his website for all the data. We don't have that. So there's that, but the more websites, the better. The more access in different ways and in different expressions to Wise and the Wise community, the better. So that's what this grant program we hope will incentivize some of. We hope it also incentivizes some projects building in the space. We're not quite done writing up the language for that, but that's a big one. But 2 things I think that I can talk about today for little surprises, for some fun stuff.
I love surprises.
I think you'll like this one, Jacob. Anyone who contributed to the Wise Token Community Legal Fund. We obviously we ran a raffle and gave away some cool things. Some ledgers or some apparel. Some people got some Wise Token, and that was fun. But we realized these people are like the super users. So we want to give back. We're creating an NFT project for them, where these NFTs will have unlockable content, and the details aren't fleshed out, so don't hold me to any of this. But it's going to be very close to this because we had a solidifying meeting today. And again, you know, you're hearing this first here, but the NFTs will be sent to everyone. It'll look, there's three. Let me get to it. There's one that you get, and you can at any time within a year redeem it for, you know, the number's not fixed, but let's say $1,000. It's going to be somewhere around there. And so your NFT is backed by $1,000. Now it also gets you, you know, virtual tickets to events we do in Decentralized and all this other stuff that we're planning. And so it's like your ticket to that, because you're a super user, you deserve it. Now, if you do decide to cash in at any point during that year's time for that $1,000, yeah, go ahead, you can. You'll get your NFT will turn into a burnt version of itself, which is pretty cool. But you still hold the NFT, and it's the ticket to all the events and stuff. We're not going to take that away. But if you hold on for a year, there's the whole pot of money is going to be, let's say, $500,000. And there's 180 people who can cash in for $1,000. That leaves about $320,000 just in the pool. So if you remain for a year holding this token, that rest of that, whatever, you know, whoever sold out, but the people left split the remaining pot and have some other cool things that, you know, we're a little further along and we can offer some different, people going on, like different partnerships, you know, going on praise and doing some stuff over there, or getting an NFT over here, and some just other drops of cool ways just to reward the people who really helped us. You know, this is a huge milestone for us. It's going to help with a lot for the project, and we're excited to give back. So
that's awesome news, man.
I love it.
That's awesome news, and that's one of the benefits of what you can do with blockchain, is you can take groups. Just like on an Excel spreadsheet, and you can say, well, this group right here contributed to this project, and I wish to reward this group. And at any point in time, for any reason, people can create projects that give thanks to people that support communities, and you see that happening in cryptocurrency. So I think that's awesome, and I will make another confession and admission on this, that I had the Satoshis for Wise token bid. I had a bid ready on those, and I was also most of my is staked, but I also had some liquid. I was excited to try to push before the contract was over. But I had some. I am going to make it an excuse, although I could have done this earlier if I was planning properly. But I procrastinated too much. And I had my computer out of commission for a couple days working on issues that actually made it to where we couldn't even do our live stream this last Monday, which is why we're doing it a few days later. But I was watching it and following it every time I was around electronic equipment that I had access to, and I'm so happy to hear about the success of the project. And no, you know what? Here's where I went, Devin. Praise, NFTs, the project that I know with Jeff doing NFTs, working with mutual aid groups. But I know that Praise is dead. You know, you look at the currency with the conscience, and now I do remember what you're talking about. I mean, this is huge when they're doing NFT drops for their community, NFT drops for their community as well. So I think anytime you see anytime you see collaboration and interoperability in projects of cryptocurrency, those are more of those bullish signals that you look for. You know, you read the white paper, you look at who the team is, you look at the tokenomics, and you look at who are they working with, who's talking about them, where are they at, you know, what's their goal. You know, who are they trying to communicate with and collaborate with? I will say that in the world of NFT drops, if you can make partnerships with any people, especially, I want an FBI NFT. I mean, I don't even know. I definitely, I mean, you know, just to say, I remember back in 2021 when they were just giving FBI NFTs away, you know.
Oh man.
So yeah, Praise is going to be big. I know they're just in seed fund round. I think Monday they're doing it. The way we did it Wise is Peter just funds it all. Like it's his project, and he doesn't want VCs to influence any of it. That might be a point of centralization and say whatever. Anyways, I know, you know, just one person as well, but it is his ethos. and he doesn't want that to be changed. But what Praise is doing, so they're doing an initial VC raise sometime this week with accredited investors and all that stuff, trying to raise, I think, 200,000, 500,000, somewhere around there, to run the company side, and then boom, do an online, like a fair launch pre-sale like we did. Using the same framework, we're helping them all out with that, building up their back end and getting their code ready to go. And that's the other service we offer. If you want to build on our space, hey, we will give you the cookie cutter frame, everything to get this going fair launch, and tweak it for your purposes. So then cool. They'll raise on top of that. And remember, all the buys are going to be in Wise token, and they're going to be every day instead of like we did, where we held off to the end. There's a lot of value lost there, honestly, with Ethereum's price was skyrocketing. So right. If you had maybe bought these tokens or created these tokens but held them back until the end of the pre-sale, so no one can sell and manipulate all kinds of stuff. It's going to be exciting. They're going to be buying Wise, millions of dollars of Wise, hopefully per day for 50 days. Be pretty sweet. And they've got some partnerships that it will blow your mind when they announce them all.
This is cool.
Just super excited to work with them. And then, if I can say one more thing, sorry, I know we're talking a lot about Wise, but we also have a partnership coming out, and all the paperwork's now signed. There's going to be a lot more fanfare when we put this out publicly, and there's some stuff that needs to happen on their end first. But we are partnering with a financial institution, a traditional investment firm called Main Oak Capital. And I'm sure maybe, I don't know if you're in the Telegram group, maybe you see this one guy floating around, his name's Sean. Been working with us for a long time, but he has a lot of connections to huge, real estate deals and stuff. And we're already setting it up. It's in the works where lending and borrowing will be what's useful for these people to be able to put the sum of the money, 10% of whatever the fund is, in a stake. Have that stake service itself almost as you borrow against it, 77% of it, and then goes, invest that money elsewhere as well. And obviously have, liability considerations, but that's the gist, and where you can almost double invest your money. And that's what's appealing to these traditional investors. And that's what we've got set in place. This legal opinion letter helped us do it. And that's going to be very big. Got a lot of institutional interest for sure. So we're their primary crypto investment strategy.
Man, that's awesome news, man. Congratulations to Peter. I know, we have not finished our website and got our due diligence done. You guys have gotten so much done in the Wise Token team. I'm like, well, I don't want to have him on until I've got more of my ducks, in a row and things squared away. But what you guys have accomplished and what Peter's done, as the founder of Wise Token, and continuing to not just walk away from a project, but to continue to pave the way and to help inspire others around to innovate and come up with ideas to do more stuff. Like, it's just cool. It's just awesome. It's awesome to see, and it's showing. And it's showing in what's going on. It's showing in the rewards that are happening. And this is groundbreaking. I knew when I saw the success of that legal opinion letter, in a world where you're just now hearing about regulations and this bridge between digital DeFi and cryptocurrency blockchain in traditional financial markets, and who's a BitConnect and who's a what and how do we know? And so to be able to have a legal opinion letter, that you can't get a more interoperable bridge than that, because money currently is a legal institution. It's called legal tender for a reason. So to have a lawyer say, from the world of legal tender in the world of current money, I speaketh that this product right here is not the junketh that you are worried about over there. So I think on some level, that's great, as much as for what it does for maybe other exchanges, like maybe KuCoin and others can be right around the corner for potentially being listed as well with something like this. So we'll see how this plays out,
We'll be submitting the application in 2 weeks for KuCoin, or less than at this point. And then it's up. It's in their ballpark, or in their side of the court, I should say. But we've checked all the boxes. I don't see why not. So.
You know, it's cool. Here's what I think, because we've been following crypto for so long. You know, I wouldn't be surprised. Here we are looking at how high gas fees are, and we all remember the success of how unique this all launched and took place. And shortly after it, Ethereum just got hit with this massive scalability issue, which has led the rise of Polygon and all these other networks. But people who start doing their due diligence, and they start looking at real tokenomics, how a project works, how decentralized is it. You fall in love with Wise. You fall in love with Wise token for the ethics, for the transparency, and for how decentralized, how equal it is from its foundation. The tokenomics, the tokenomics side. You know, I see that when Ethereum, because there's stuff on Harmony One, there's stuff on Polygon, there's stuff on Binance, all the tentacles and all the webs have been woven to help spread value and increase the network to other communities. However, when Ethereum gets its act together and proof of stake hits and its fees do go down, it's going to continue to add value to the whole staking platform and the whole community. Like there's like a dam of water that I know is just a value that's just waiting to be released the moment some of these new implementations come place. They may be a few months or 6 months to a year or what have you, but we're getting closer and closer. And you know, already with the implementations, I'm talking to people who picking at the right time of day are being able to push transactions through on stakes that they haven't before in a long time. So, you know.
Yeah, and hey, I'll say also, if there's anyone listening, you know, we have all the math done. We have two brilliant mathematicians on our team, Renee and Christoph. The math's done. The UI is halfway done. The front ends, all that stuff. We just need more Solidity developers to. Honestly, it's just time typing. That is literally what's limiting us right now. And obviously skill. There's skill with what comes to that, but our lead developer would be able to, you know, parse through that if it was just written. It's easier to edit than to write, for sure. So it's what we're looking for. Solidity developers had two great conversations today. Maybe that changes tomorrow. Maybe not, but we're always looking. So trying to grow our team.
Well, gentlemen, I do have to duck out. I have a prior engagement, but I've really enjoyed this conversation and hearing about the new developments with Wise Token. And it's great to hear that so much awesome innovation coming in the near future. So that's always good to hear. And
hey,
yeah, I'll have to catch you guys on the flip.
We'll catch you, and we got the live stream. We'll do it next Monday.
Later, guys.
Good to see you, brother.
Yes. Take care.
Later. That's great news, Devin. That's awesome, brother. I'm really excited about the future Wise. And I will say this: if people are selling those NFTs that get traded after they get dropped.
Yeah, they might.
Oh, but now it's only for the people who hold the NFTs that get a reward. But you know what? It's still I'm sure there will be another project in the future and another way to support. But you know, it's good to have different people in the community partake and be rewarded and benefit from this. So I mean, at the end of the day, I'm happy to see that it's successful and that we're taking it to the next level. So congratulations. You know.
Thank you. And we'll have, you know, other stuff in the future. I'm sure comes up that requires community and to prove decentralization, and I'm sure they'll come through. And you know, this is not the end of what we're doing here. So.
No, this is cool. Very, very beautiful. And look, you can't. In the world of cryptocurrency, you don't often hear of something called a price floor because in most cryptocurrencies, no such thing exists. But however, now I say that in theory, there's no such thing as a price floor with the value of Bitcoin. We all expect Ethereum or Bitcoin to have some value in the network. That ceteris paribus, that happening, you've got a smart contract that is locked liquidity that prevents, unlike we talk about Bretton Woods and gold standards and previous currency systems, it prevents the rapid removal, it prevents the hyperinflation, it prevents the devaluation of by code of a currency that's backed. So, you know,
determined by the market too, not like we set a price floor. Right? It's like no.
Look, as we talk about it, do you see the value going up? Live action? You think if we continue to talk about the value of no, That's cool, brother. That's cool. Thank you for sharing that. And that's exciting news, man. I really that's awesome. So for all of you who continue to stay abreast of the news we share, it will ripple out for sure. This is not going to stay contained on this channel, but at least you got to hear it pretty darn quickly from a member of the Wise Token team, right from Devin. And congratulations on what's going on with Praise Token. I'm excited about that. That's going to be an awesome project, bringing more NFTs and value to the Wise Token space. That's just.
We got a DEX on Casper coming out here, and I don't want to put a number on it, but 3 weeks.
And people will be able, I'm sure, like Uniswap and others, there will be some kind of Casper Wise liquidity provision to be offered to get that exchange rocking.
That will be coming about a month and a half after. Yep.
I love it, man.
Something I want to ask as far as that NFT that you were talking about, giving to the community. I know that Wise Token was building out a liquid NFT platform to allow NFTs to be used as collateral for a loan. Do you think that sometime, let's say if that was built out in that year's time frame, do you think that less people would sell because they could just get the value of the NFT?
Yeah, this is a really good question. So that project will be done. I'm gonna put 3 months on it for like everything we want, like MVP, minimal viable products. But we'll probably have a version out before that. But I'm gonna give it a little bit of time, and also, hey, another Solidity dev might make that half the time, just saying, because the math's done and the UI is almost done as well. But the liquid NFTs is going to be huge. It's the first time that someone has been able to. Well, not the first time. There are other competitors out there, but they don't use it in the way we're using it for. And so what we're doing is allowing the NFT communities. There are these very strong communities, and I'm sure you'll talk about this here soon with like OneForce and actually, I gotta go to that later. So these strong communities that would vouch for the value of NFTs in their community, and that there's what is the value of an NFT? Some people know. Some people feel that. I wouldn't say a monkey with a hat on costs $1 million, but some people would, right? So what this does is it empowers the communities and allows both sides, the NFT owner, to be able to liquidate his NFT without ever selling, and it allows the voucher to vouch for the value of that, earn some interest on top of it that the NFT owner has put up top, and she can take away 4% and have vouched for the value of it, and if they default on their loan, she gets the NFT. So it's a very unique way to never sell, for people who support the community, maybe can't afford one, to still support the community and make money off of it, and maybe in the off chance get it, right? Sure. If the person defaults on their NFT. So it does rely on, and it's 100% market value is what you're going to get out, because I guess it's a totality a little bit, but or a tautology. Yeah, totality. Tautology? What's the word?
Totality? A tautology, if the definition is baked into the tautology.
Right, yeah. So 100% market value is the mark. So you can put up the price at $1 million, but the market value might be $100, and someone will fund you for $100. But so that's the $100 is 100% market value. It's not like your $1 million. You're not going to get 100% of what you perceive the market value is.
Sure.
You're getting 100% of the market value, period. Because whatever you put it up with whatever incentive you do, maybe it's 5%, maybe it's 10% on top of it to incentivize maybe a quicker turnaround to get your loan going. Yeah, you're going to get the full market value of that.
That's actually a pretty good segue into one of the last articles that I had pulled up before. Jacob has some information to share on this subject. It's what the role traditional finance plays compared to decentralized finance in the world of derivatives. Now, look, the idea is that with all this hubbub and talk about what's going on in the world of crypto and DeFi, the reality is that it's such a small fraction of the traditional financial markets. The traditional financial markets are huge compared to what we call DeFi in the world of cryptocurrency. And this article is basically stating that what you're talking about with NFTs and with Wise Token and being able to take something of value on a network, on this little network right here, and then lock it up for other people who find a value of it and being able to exchange and earn interest on the time of that value on these new little ledgers. That's not that's not a threat to this old traditional financial system. And this chart right here is showing the mature financial system, the global debt, and then this tiny little dot would be the DeFi, total DeFi. Global money supply, is the blue, and then this tiny little dot that you can't see is DeFi, pardon my language. So it's a tiny little dot that you can't see from money supply, debt, and the financial system. And I was to say is that when you're talking about NFTs and you guys are talking about loans and borrowing, you're talking about something that's based on a collateral, on an asset of value from the beginning. So when we look at this mature financial system, we see this huge ball from this global debt, from this money supply, which is right here, and then they're talking about this DeFi, which is this tiny little dot. So the idea is that in reality, crypto is so immature. It's so young and it's so small. It's not a threat. It's not a threat to the derivative markets or a lot of what you see in traditional finance. It's not here to disrupt in any time soon. It's short or medium term, the counterparts. I thought you might appreciate that with all the innovation that's happening in such a short time. With a project like Wise, we're still talking about baby steps in the grand scheme of blockchain and DeFi rolled out for the masses. For not that it's not going to be ready soon, but it's still taking a little time.
Yeah, it'll be waves. It'll come in waves.
Yeah.
So let's see here. Was this maybe the last article I had before yours? I had a couple more. No, yours are right here. Okay. U.S. may regulate DeFi, El Salvador's Bitcoin drafts, and more news. If you guys kept up, I'm sure y'all have heard about El Salvador many times. And what's going on around the world with different countries talking about using Bitcoin or cryptocurrency as a legal tender. So that's basically you're just seeing more regulation and more mainstream adoption, and that's here we are, August 19th, 2021, and we're talking about central banks. We're talking about national governments adopting something that 2 or 3 years ago the largest financial institution spokesperson was saying it's fraud and to walk away from it. So think about the gravity of that. 2 to 3 years ago, Jamie Dimon, which is a spokesperson for one of the largest financial institutions in the world, was going out to his investors and going out to all the senators and legislators and all the king's horses and all the king's men saying, stay far away. This is a fraud. This is a fraud. Fast forward, and Wells Fargo, as Ryan said earlier, has to shut down its consumer credit line, and you have all these other issues going on in traditional finance, and you've got national governments talking about how they can incorporate Bitcoin, this new technology, into their financial markets and systems. So, that's now we're hearing talk of CBDCs, and I don't want to spend too much time on that subject, but this is what's that?
Hours of conversation right there.
Yeah, exactly.
The podcast, we touched on that in the last episode.
We did. So make sure to check it out. But it's really just about how this market, just like that last article I just pulled up, how small the dot is. While it's in its beginning, it not as mature as other financial markets, it's powerful and it can't be ignored. It's like a dandelion sprouting out of the sidewalk. And this was my last article, Jacob. I had this prepared before I went in because, and actually, what you were talking about, Devin, earlier, I was like, oh man, I wish I could have just popped this last article out first because both of you guys are really talking about the next wave of value of how NFTs can be bridged into DeFi. And this is really, Alibaba is the Eastern Amazon, the Amazon of the East, so to speak. And now they are pushing NFTs for their customers through the Alibaba network. And so people will be able to acquire or exchange sold NFTs on their auction marketplace. Now, it's a new copyrighted centralized blockchain of a sort. It's not being advertised being built on the most decentralized network, but there's a lot of blockchains out there. There's Ripple, there's Stellar Lumens, there's Ethereum, there's Bitcoin, there's right.
There's
so
private blockchains that are being in South Korea where they pay you for just your bowel excrement, and you could use that to pay for items at school.
All right.
So, all right. Hey, putting NFTs to work, this really goes into what you guys were talking about. And this article talks about putting NFTs to work. With more people getting their hands on NFTs, there's a need to put these assets to work. Okay, that's exactly what it says. There's a growing need to put these assets to work. Bada bing, bada boom. The opportunity cost of holding that value and just sitting there. And that's what you guys are tapping into. So, what Devin and what they're working with Wise, what we just praise token, we're talking about taking these NFTs of value on the chain and using them so that others can participate in the value that's there in the interim, and also at the same time potentially earn NFTs in the process, like you were saying. But this is awesome. I mean, it's beautiful. It's layer upon layer that we keep seeing happening in crypto and blockchain. And what I'm really excited about, and I have to catch up now that the computer and the technical stuff is aside, but I know that Jeff's done some great work with his NFTs at Apocalypse Art Club. And you talk about having NFTs and being able to engage in an ecosystem and have opportunity to do other things other than just hold on. That's one of the neat things about NFTs, is that these tokens can be used as keys into communities or into meetings, into celebrations, into opportunities, and they can also be made for a limited time. The imagination really with smart contracts is the limit. So NFTs and seeing what's going on with Wise token, it's like all the notes are coming into place for this beautiful symphony. And the only thing holding back right now is just a little bit of the market awareness and, of course, the gas fees. But regardless, it continues to add value. That's exciting. Now that I've got those articles, let me erase it, because you guys have talked about, I really want to get to these NFTs and what Jacob, you have some exciting news to talk about NFTs as well. Is that right?
Absolutely. I have some really exciting news, and I'd like to start it off just with the Sync network to get everyone kind of an idea of what's possible in this space, really. And well, I can see you kind of asking in your head, well, what is the Sync network? Well, it's a way for you to take your liquidity positions and turn it into a time-locked bond using NFTs. And so you deposit your LP tokens, and what ends up happening is they mint you in an NFT of differing rarity. And so if you actually go on the Medium article where it says limited editions up there, they've actually teamed up with a few different artists. They actually have limited edition NFTs that could be possibly more rare than your LP positions being minted just because you're using a timed locked bond with their protocol. And utilizing Wise token and their liquid NFTs, you could leverage a position where you take, let's say, an NFT you're holding, you liquidate it, you take a portion of that NFT to put into an LP, liquidity provision between two pairs, you take those tokens and you turn that into an NFT. That's now a timed lock bond. So in a way, you're leveraging your position on your very first NFT way down the line. And this is a way that we can merge NFTs and DeFi that just blows my mind. That's possible by merging existing technologies in this space, creating new technologies in this space. It's mind-blowing. The possibilities are endless. What you can do now, you're able to leverage your NFTs in a way that's a non-taxable event. This isn't something that was possible at all in the traditional finance system. And typically when you have an asset that you're leveraging, you're collateralizing it because it's worth something and it could be damaged. It's a physical thing. These NFTs, they can't be damaged. They can be devalued for sure if there's less demand for them. But it's not like a home where I have to have upkeep on this to take out a loan on it. And it blows my mind the possibilities in the future of finance that Wise Token is providing, that others are providing in this network. And it's amazing because you have NFTs and NFT communities like OneForce. If you want to go ahead and click the last one for me.
I have a sad story about this morning, but go ahead.
About OneForce?
Oh, yes. This is one of my favorite NFT projects to date. Oh, my God. They are actually inspired by the gorillas, and I was blessed enough to be able to get into the pre-sale. I spent a long time in their community, just like the past 3 or 4 days, constantly communicating with other people, talking with other people, educating them about DeFi in this space, and trying to teach them about Wise Token and what it is to be asset-backed, how important it is as a monetary policy to have an asset-backed crypto or an asset-backed anything at all, really. But they're actually inspired by the gorillas, the art style, and they plan to make an entire lore-driven community by the community. The lore was made by the community, and the community is about 20,000 people strong in their Discord before launch date. It blows my mind. Gary V himself was caught in their community looking at this. And so there's a lot of people who have interest in this community, and something like this is just, when it's so community based and community driven, the value potential there is huge. If you could educate these users, these NFT holders, hey, the value that you have, you don't need to sell it. Utilize Wise Token, get a loan, take it out as collateral for a loan, and use a little bit of yield farming strategies, a little bit of smart financial strategies.
Hey, heck, if you just take out USDC versus ETH, if you're taking out ETH, you're long in the market. If you take out USDC, you're short in the market. Like, it's just that simple.
Yeah.
You don't need to, it's you could take out and hold, or yield farm, or you could trade, or you could wrap into another. Exactly. There's a whole lot of things you can do with varied amounts of risk, but you can do them.
And I just want to add real quick before we wrap this up. This is not financial advice. We're not trying to add to any vices. This is not meant to be any type of financial. It's just educational information, entertainment purposes only. It's a new technology. It's a new knowledge. It's a new language that we're learning. And the opportunities are absolutely mind-blowing. It's as mind-blowing as the innovation that's taking place. But it's definitely high risk, and it's definitely something that requires you to do your own research and your own due diligence. So if you have questions, always feel free to drop it in the comments and let us know what you would like to know more about and learn about. In the meantime, we're going to continue to do our best to find the latest and greatest of what's going out in blockchain and crypto from that solid, decentralized, ethical, equitable, old school, what we're looking for, and that value, that be your own bank, that the whole purpose of what this technology stands for. And thank you guys, Jacob and Devin, for taking the time to hang out on this stream. I know we went way longer than normal, but it's worth it because we had a lot to talk about. A lot of good stuff happening. Well, I'm so glad that Devin, you had time to jump on our stream too, and that Jacob, you could make up on a time on not our usual Monday, now that it's a few days later. But with NFTs, with lending, all the news going on in the traditional markets, I just felt there was a lot to cover, especially with I have it scrolling on the banner below to make sure everyone knows as they keep watching. Sure, like, yes, please do that. That's nice. Thank you for sharing the love. We really appreciate that. Also, hitting the bell and subscribing. But congratulations to the Wise Token team and the community for more success. And we're less than a year old. I mean, when I first learned about Wise Token, it was in the fall of 2020 when it first began. So we're not even at its 1 year anniversary, and what's been accomplished with that protocol is mind blowing. It's exciting, and it's perfect timing. Just like you guys remember how what was it called? The phase, the leading up to it, the phase. What do we call it? When you're raising capital for what's it called?
Pre-sale or
the pre-sale. It was called the pre-sale, but something. Yeah, the Wise Token pre-sale.
Okay. The Liquidity Transformer event.
Yeah. The Liquidity Transformer event.
I'm so proud to say that I took part in day one.
Yeah, that's one thing. That'd be cool later on at NFTs. But I'll tell you something. It was so cool seeing there was a perfect storm, because y'all remember where DeFi and the crypto market. It was the perfect time to provide Wise Token that initial boost of massive liquidity to hit Uniswap. And then you get to later on after its launch, no one could have seen the winter of DeFi where gas fees and things happen in the market, but yet the project still got built on. The roadmap, so to speak, was still acted on. Layers kept happening. So for me, I'm seeing this perfect storm in the background of tinkering away and plugging away and working hard at what Peter has continued to make happen, and the team continues to grow. It's just awesome, because I see that as everything is getting set into place again, we're looking for some really exciting and eye-opening times for Wise community. I want
to say it's part, in huge part, due to what both of you do, and anyone who's watching who's a member of the community. Like, first of all, I wouldn't be here without you guys, but also you guys add tons of value to the space, and you talk about it, you teach people about it, you educate. That's what we need in this space. We need much more education and much more user-friendly front ends. But that's, part of that we can't help with because we don't have the skills. The other half we can, because we're good at talking to people, and we created distribution methods to talk about these things. Thank you, YouTube. Thank you, Apple Podcasts and Spotify.
Discord, Telegram, Instagram, Anygram.
Social medias.
Exactly.
Yeah.
So, thank you guys.
Hey, well, I think with that, I'm going to go ahead and wrap up this live stream. I know that I look forward to making some content with you guys, live stream and not live streams, as we continue to develop our channels, whether it be the podcast at specificknowledge.net, wisebeyondbitcoin.com, as Ryan and I work eventually to get that educational vision that we have to be a resource for people to go to. We would like you to know how to learn how to get a MetaMask wallet. We would like you to learn how just the difference between Bitcoin and Ethereum. So we're actually working on the questions and answers section of this website, where we really want it to be something that if you just want to learn about what it is, you can go to it. And if you want to really take the next level and get involved, you know where to go to get the wallet. You know how to get the wallet. You have a nice little video to explain to you the process of downloading it and how to use it and operate it, as well as what we're really excited about putting together is an interface that allows people not just to see a list of projects by market cap, but projects by category, by what they do, from what the categories that we put them into. So we'll have different categories. DeFi, NFTs, like you talk about, smart contract platforms, privacy tokens. But for those people who are really into crypto and this platform, it's nice to see the prices on all these different nomics and coin geckos and coin paprikas. But it's also good to see a breakdown of the asset classes. Like really, what are the different places in the economy that these tokens are working to innovate in or disrupt, or whichever creative destruction term you want to use. So send us good vibrations. I know we don't have a donation address or any way to really support except with your love right now, but I'm sure eventually we'll work on that too. Until then, hey, Jacob, thank you guys. Devin, thank you guys for your time so much. Happy Jupiter's Day. Happy summer. And I look forward to catching up with you guys pretty soon. Till the next time, namaste, and have a beautiful day, y'all.
But happy Photographer's Day.
Is it really? Oh, you